Welcome to The Tax Factor, the UK's top tax podcast from Blick Rothenberg, the tax, accounting and business advisory firm. This week with Nimesh, Shah and Tom Goddard.
Welcome to The Tax Factor. It doesn't feel that long ago that we wrapped up for our summer holidays, but has our Chancellor Rachel Reeves taken a holiday this summer? It doesn't seem like that to me, with tax stories continuing to make the headlines in the soaring heat and that fiscal hole getting bigger and bigger. I'm Nimesh Shah, CEO of Blick Rothenberg, and I'm delighted to launch this new season of The Tax Factor. As before, we'll be covering the latest tax developments, including the road to the much-anticipated autumn budget. You'll hear familiar Blick Rothenberg voices returning, alongside some new ones joining the lineup. We've also got a fantastic roster of special guests lined up, so I'm confident this will be our biggest and best series yet. And speaking of new voices, I am absolutely delighted to introduce a new one right now to you. Tom Goddard, Senior Associate in our private client team and resident Stato. So if you visited the Blick Rothenberg website, you'll know Tom is the author of our monthly HMRC tax receipts review. And I'm pretty certain Tom is going to hit us with some tax stats in this week's episode. Tom, big warm welcome to you to The Tax Factor.
Thanks, Nimesh. It's great to be here.
So Tom, I wanted to kick off this new series with something new, which is the news. What have been the tax headlines that have caught your eye over the last few weeks?
The Tax Factor. Headlines.
You and I will both know it's been a busy few weeks with regards to publications coming from the press. And some of the key headlines that I've seen are government borrowing costs have surged to a 27-year high, therefore tightening fiscal room and making potential tax rises harder to avoid. Therefore, the Treasury is weighing up changes to a multitude of different taxes as a way to raise revenue without touching income tax, national insurance or VAT, which have previously been ruled out by Labour's manifesto pledges. And tax creep or fiscal drag continues to hit mid-learners, with frozen tax thresholds quietly pulling more and more people into higher bands as inflation does the work, which is currently sat at 3.8%.
So I can see, Tom, you've been busy on the Sun Lounger flicking through the broadsheets and lots of stories about tax. So the headlines are very much dominated by potential tax rises at the autumn budget. We couldn't ignore the autumn budget in this first episode as we get to the end of our summer. I thought that it would be a good idea that we dedicate this episode to run through what you've seen, Tom, and what you think is going to happen at the autumn budget. And I am going to put you on the spot. I want you to score out of 5. So this is your opinion, out of 5, the likelihood of some of these changes happening in a few months' time. And then maybe in a few months' time, we'll come back to you and see how well you did on your scoring. So let's kick off. One of my real pet hates, extending the freeze on income tax and national insurance thresholds. Because you mentioned, Tom, one of the headlines was around more middle earners getting dragged into higher rates of tax. What do you think? Out of 5, how likely is this one to happen before we get into the detail?
So I think, firstly, it's going to be extremely likely that Rachel's going to freeze the income tax and NIC thresholds beyond the original April 2028 date. I think it's a good generator of income tax revenue and also doesn't go against her previous manifesto pledges, which I mentioned earlier. So on that basis, I think it's extremely likely. I'd give that a 5 out of 5 rating.
Wow, big bold move from Tom, straight out of the blocks. 5 out of 5 on extending income tax and NIC thresholds. I think you're right, Tom. It's been a horrible way to raise taxes. I was asked by the Financial Times recently in an article by Moira O'Neill, one of their personal finance journalists, about one of my pet hates around the tax system. And this one is right at the top of the tree for me. Some analysis suggests that the frozen thresholds are actually the same effect as increasing the basic rate of income tax by 4 to 5%. And I said in that article to Moira, if that had happened, then I don't think any Chancellor would be in the job. To pick out some numbers, because I'm going to put you again on the spot with some stats, how much do you think the freezing thresholds until probably the end of this decade, how much is that going to raise for the government?
Typically, we see that if the freeze on income tax and NIC thresholds were to be extended, this could raise between 9 and 10 billion per year by the end of Parliament. As you know, they've been frozen since 2021. The cost of living has actually gone up 20% since then. Just to sort of bring to light some of additional stats on the effect that this will have. By 28-29, we could see an extra 4.2 million people brought into the scope of income tax from 2021 when the freeze was initially brought into place. An additional 3.5 million people could be brought into the higher rate, an additional 600,000 people into the additional rate by that same period. Just to bring to light what the thresholds would be if the freeze wasn't enacted, the personal allowance would be at £15,500. The higher rate would actually be at £62,000. Just to give a overall figure on the income tax thresholds, it would actually be enough to fill the current estimates of the fiscal black hole that all of the papers are talking about, raising an extra 40 billion by 27-28.
Wow, some crazy and also scary numbers there, Tom. This stealth tax of freezing allowances is really effective for the government, and you can understand why. Actually, this was a Rishi Sunak measure when he was Chancellor. Now Rachel Reeves has carried this on. It's really attractive because you don't break the manifesto pledge not to increase taxes on working people, but yet you're doing it through the back door, and you've illustrated that very neatly by saying how many extra people would be brought in to the scope of income tax and also those higher rate thresholds. But it's not just income tax and national insurance, because you've actually been poring over some other thresholds which have been frozen for a considerably long time. We probably haven't got time to talk about all of those, but pick out some of your favourites, Tom.
I mean, I think the most surprising one is the gifting allowance, which is the tax-free amount that an individual can gift. That's been at £3,000, and I bet you can't guess how long it's been frozen at that level for. It's actually been frozen since 1981, which if we had adjusted that for inflation, that figure would be now closer to £11,500, just showing that this frozen thresholds is affecting not just income tax rates, but also across other areas of tax. Additionally, some other ones we can talk about are the inheritance tax nil rate band, currently at £325,000 and has been that way since 2009. The resident nil rate band, currently at £175,000. That has been the same since 2020. If we took both of those combined now, adjusted for inflation, individuals would have a inheritance tax-free allowance of £740,000.
Well, again, so inheritance taxes on wealth, also affected by this stealth regime. Actually, by doing nothing, you end up raising more taxes. And we've seen that in the income tax receipts that you look at. We've seen it in the inheritance tax receipts year on year. These numbers are going up gradually, month on month, year by year, because of this policy. And I think you're right, Tom. I can't see that this is not going to go away. And if anything, as you say, the likelihood of this being extended is pretty high. Let's then touch on taxes on the wealthy, because about a month or so ago, there were huge numbers of headlines and actually quite a bit of scare in our industry about potential wealth taxes. And this came from a former contender for the Prime Minister's seat many years ago, Lord Kinnock. He said that we should be introducing a wealth tax. So again, Tom, out of 5, how likely is a wealth tax going to be announced in the forthcoming autumn budget?
So for wealth taxes, I would personally give it a rating of 2 out of 5. I think the reasoning behind that is a lot of the wealth taxes were previously actioned within the last autumn budget. We saw reforms to capital gains tax, IHT thresholds, including business property relief and agricultural relief, and also the non-dom reforms. I think Rachel Reeves has got her hands tied if she wanted to bring in a wealth tax. I also think it would be administratively difficult to administer. A lot of wealthy individuals aren't aware of their actual wealth with regards to valuations not being readily accessible. And I'm sure everybody is aware HMRC aren't the best when it comes to administrative matters, and implementing a wealth tax based on valuations could be difficult for them to implement. A lot of the wealthy are also more mobile, and therefore if there were pushes to impose a wealth tax, and as we saw with the non-dom reforms, it would likely lead to a even greater exodus of wealthy individuals from the UK.
I think you're spot on. We're not going to see a wealth tax anytime soon. It is practically difficult to introduce, and also the short-term nature of our politics and our parliament means that you're not going to see the tax revenue come in from a brand new tax. I think you're right. HMRC can't answer the phones right now. They're going to have real difficulty introducing a wealth tax. So I think we can park that one and move swiftly on, because the whole subject of taxes on wealth is something that, as you said, was dominated in the autumn budget last year. And these don't really go away. And inheritance tax, we talked about before, the frozen nil rate bans have been bringing in more and more tax revenue for inheritance taxes. But it's a conundrum for the government as to how they can raise even more, because still inheritance tax only accounts for about 1% of total tax take. So inheritance tax changes in the autumn budget, Tom, out of 5, what's your score?
I think inheritance changes would likely be 3 out of 5. The only real ways that I can see the Chancellor adjusting the inheritance tax regime is through adjusting or tinkering with the tax-free gifts regime. So this would be the 7-year rule where an individual can make a gift to another individual and avoid inheritance tax should they survive for 7 years. As I mentioned previously, the £3,000 gifting allowance has been frozen since 1981. And I think that's likely to continue into the future, or she could even reduce that further. I recently published an article which was echoed by one of the associate directors at the Institute of Fiscal Studies, stating that I don't believe inheritance tax is suitable for Rachel Reeves because it's not going to generate the level of revenue that is needed in order to fill this fiscal black hole of what current estimates are suggesting is about 40 million. As you quite rightly said, inheritance tax only accounts for about 1% of HMRC's total receipts. And indeed, the whole issue around inheritance tax is particularly polarizing. Therefore, I think it would be unwise for Rachel to be focusing the majority of her time on something that I don't believe will be a fruitful endeavour for her.
Yeah, you and the IFS, clearly you're in good company there, Tom. I would also agree to that it's not going to raise that much revenue when we're talking about 40 to 50 billion fiscal black holes. But there is a bit of, dare I say, ideology in some of the government policies that we've seen over the last 12 to 18 months. And I think this is a target. I think that this was certainly highly rumoured in the run-up to the 2024 autumn budget, that the 7-year rule could become a 10-year rule. And dare I say, is there going to be some kind of lifetime cap, which is what we see in the US? So I think inheritance tax is a target. I think another target, which hasn't been talked about so far, is capital gains tax. So we did see a modest rise to capital gains tax in last year's autumn budget when the rate went from 20 to 24. We also saw some changes to carried interest and also changes to the business asset disposal relief regime. But so far, the headlines haven't talked about increases to capital gains tax. I wouldn't be surprised if we did see an increase to CGT in the forthcoming budget. But there have been stories over the last few weeks and months that CGT rates are on the decline. And I don't think an increase is necessarily going to help that story even more. But one of the things I think the Treasury definitely is looking at, which has caused the property market to be in a bit of flux, has been around a complete overhaul to the stamp duty land tax regime and replacing this with some kind of annual tax or wealth tax on mansions or properties. Tom, what have you seen on this? And again, how likely is a wealth tax on property in the autumn budget likely to be announced?
Property tax is one which has been reported extensively over the past couple of weeks. I think there's generally some weight behind what's been reported. I would give it a 4 out of 5 rating that Rachel will likely amend the SDLT regime or impose this annual property tax. I'm typically seeing that the annual property tax will be levied on properties over £500,000. And it's no wonder that Rachel is looking at UK property as a source of revenue for her. There was actually a report by Savills which valued the UK housing market at £9 trillion last year, which has risen 3.4 trillion over the last decade. Other property taxes which she might touch upon are scrapping private residence relief on properties over a certain threshold. However, I think this would be extremely unpopular with pensioners who are asset rich but cash poor, so couldn't afford to pay this capital gains tax should they decide to downsize, or in fact this annual property tax on properties over £500,000. I think the wider implications of this would actually be to stagnate the property market by disincentivizing those in larger houses from moving down because they can't afford the tax, and will actually reduce the availability of those wanting to move up the property ladder.
So you've given it a punchy 4 out of 5, Tom. And I happened to be on a radio interview with the author of the report, which suggested that we should replace the SDLT regime with this annual tax. Now, he admitted that in the short term, scrapping SDLT is actually going to cost the government more, and they would need to borrow to fund that hole that SDLT would leave. But in the long run, you generate more and have a simpler system and increase more social mobility by having this annual tax. I'm not sure I'm quite convinced about that, but clearly Tim Lewing, the author of that particular report and a previous government advisor, has done more thinking than me around that. But the real controversial one, which you've touched on, is main residence relief. It raises, or should I say it costs, the government about 30 billion. It's an incredibly expensive relief. Now, that number is very sensitive because it would rely on people then moving or not moving and selling their properties. So we can't be certain about that 30 billion number. But you can see why Rachel Reeves is very attracted to that in the absence of doing maybe something more dramatic on capital gains tax. But I think she does want to be a tax reforming chancellor. She would certainly put her flag in the ground if she did something as dramatic as this on property taxes. I'll be watching that one very, very closely. And I think the other thing that people will be watching very, very closely is pensions. And you might go, hold on, we can't surely have more changes on pensions. But the papers have been rumouring 2 changes, haven't they, Tom? What have you spotted on pensions?
So with pensions, the stories that are coming out are to do with the lifetime limit of pension contributions or the tax-free lump sum, which was actually the subject of rumour in last autumn's budget, where we found that a lot of individuals were drawing down their tax-free lump sum based on rumours which were leaked by the Treasury, which didn't actually materialise. Those rumours are now coming back full circle, where Rachel Reeves is looking to seize upon the massive wealth held in pensions in order to fill this black hole. But again, I wouldn't consider it particularly likely based off previous discussions that Rachel has had, where she has tried to incentivize these big pension funds to invest in the UK. Therefore, it would seem a bit counterintuitive to disincentivize people putting money into their pensions by making the taxes on these more onerous.
Yeah, I agree that pensions have got a bit of a bad reputation, especially since the inheritance tax changes that were announced last year. And you're right, Rachel Reeves wants to encourage more investment through pension funds. And I'm not sure that changing the tax rules on pensions is necessarily going to encourage that. You've talked, Tom, a lot about Rachel Reeves standing up in a few weeks' time to deliver her autumn budget. So, final question for you. Out of 5, how likely is it that we'll see Rachel Reeves delivering that autumn budget?
I think it's a tricky question that you've asked me there, Nimesh. I think I would say, based on what we've seen in the press, that Rachel Reeves will be the Chancellor delivering the autumn budget. She has the Prime Minister's trust, which he has explicitly stated before, and to remove her from the chancellorship now, I believe, would undermine the credibility and would cause some economic instability right before the autumn budget. However, I do believe that her position as the Chancellor will rely on the contents of the autumn budget, and indeed the market reaction that follows will be crucial to this.
Very well put, Tom. I think that was a spot-on assessment. We think Rachel Reeves will be the one holding the red briefcase in a few weeks, months' time, but it may be her last autumn budget. Who knows what the markets may say.
Blick Rothenberg, celebrating 80 years.
That's all we've got time for on this week's episode of The Tax Factor. And Tom, congratulations on your debut appearance and taking us through all those numbers. If people want to know more about those numbers or Tom's numbers, have a look on the Blick Rothenberg website. I'm sure this won't be the last that we've heard from Tom and his wonderful tax stats.
Thanks, Nimesh. It's been great to be here, and I hope that I can illuminate some more taxes with my stats going forwards. As this is our first episode of the new season, Just a reminder, you can catch up on all previous episodes of The Tax Factor on our website or wherever you get your podcasts. You'll also find the latest tax news and insights on the Blick Rothenberg website, including our dedicated Making Tax Digital Hub, which is something we'll definitely be covering in one of the future episodes, as Making Tax Digital is going to affect a lot more people in the months ahead.
Absolutely. And on that note, thank you everyone for listening. Join us next week when Neil Insel will be in the podcast chair alongside another one of our new presenters, US-UK enthusiast Annie Hughes. Until then, have a great weekend and goodbye.
Goodbye.
That's the Tax Factor. Since launching in August 2023, we've become the UK's top tax podcast in the UK podcast chart. Join us every Friday for expert insight on the latest tax news. Subscribe on your preferred podcast platform or listen direct on the Blick Rothenberg website, where you can also find the latest updates and analysis. The Tax Factor from Blick Rothenberg. Copyright 2025.